Hello and welcome. I'm Pacome Breton, Director of Investment Risk here at Nutmeg and part of the investment team. So today, for this mid-month investor check-in, we will talk about the news flow so far in November, the US election and the discovery of a new vaccine by different players. We will see as well, try to understand the disconnect between markets and the reality on the ground with the increasing number of COVID cases. And lastly, of course, a quick word on Brexit and as well about a new trade deal just negotiated in Asia. November has been quite busy. A new president-elect in Joe Biden and two potential vaccines. How have markets reacted to this? Well, it's true that the first weeks of November have effectively brought some important news for the market. First, the US election result helped to push market higher after a fairly unattractive month of October. The Biden election was somehow anticipated, and the final results, despite the delay and the contestation by Trump, was seen favorably by markets and especially equity markets. The absence as well of a so-called blue wave, with the Republican Party keeping very likely the majority in the Senate to balance a Democrat House and presidency, was seen as a positive news by markets. The real news, though, has been somehow the announcement by Pfizer and BioNTech first, and then more recently by Moderna, of excellent results in their respective vaccine development. This has triggered a wave of optimism among equity markets, especially in beaten-up UK and continental European shares. Stocks that were heavily hurt by the pandemics, like airlines, banks, and energy companies, rebounded strongly. One clear example is IAG, the owner of British Airways, who had the best 3 days since 1988, up more than 40% over the period. But equally of note, it is that this company is doing only a partial recovery. It is still down more than 60% so far this year. If we look across the Atlantic in the US market, this market has been more resilient throughout the pandemic, very likely due because of the premium given to US tech shares and as well its healthcare components, which are more prevalent in this market. This means that, however, that US market have lagged in this recent run-up, having already been strong so far this year. And we can see it somehow as a normalization for now, and US stocks are still largely ahead of European stocks in 2020. Is there a potential disconnect between the strengthened financial market and the reality of new European lockdowns and rising COVID cases in the US? Well, effectively, it's difficult to get a bigger sense of disconnect than this month of November. We have on one side countries like UK and France, which have record number of COVID cases and are back in full lockdown, especially approaching the Christmas season, which is a critical time for the economy. In the US, the number of cases have reached almost 200,000 per day versus a previous peak of 50,000. Yet, however, counterintuitively, risky assets are having a particularly strong month, with the MSCI World, for example, up in excess of 9% so far. So however, it's worth thinking that this disconnect isn't new, and it's important to remember that markets tend to focus on more distant horizons, forecasting long-term profits and not only short-term variations. We've seen it already this year. If we think about the rebound at the end of March or early April, when the number of COVID cases were still increasing in many countries, and it peaked in the US only in July. And if we go back further, it happened regularly in the past. In 2009, for example, it was a record year for equity markets, despite the world being in recession for the big part of the year. And if we look as well in 2011, during the European and Greek crisis, equity markets started to increase well before the resolution of this crisis. So there is clearly a disconnect, but looking beyond the current situation to focus on what will come next year is what we are seeing right now. So what is the importance of the final Brexit negotiation and the news of the RCEP trade deal in Asia? Well, the negotiation over Brexit are now entering the 11th or even, let's say, the 12th hours. And we've heard that regularly over the last 3 years. It's not new, but we think it's definitely the case this time. It has been our view, actually, for some time, that the most likely outcome is still a form of a deal that would have the benefit of avoiding a no-deal crash out of the European Union for the UK overall. We're getting there, and a deal could be announced, we think, anytime in the next coming days. It can even be fully finalized next year. With this in mind, we have closed out some of our negative pound position last month to avoid being caught off guard in the coming weeks in case this materializes. Another news that is important is the news of the Pan-Asia RCEP Trade Act that got limited publicity in the newspaper, but it's a key step for Asian countries, and it's involving China, South Korea, Japan, and even Australia and New Zealand. In total, 15 Asian and Pacific countries. The deal will see those countries over time getting closer to becoming a full trading zone like the European Union or North America. It is a fundamental shift that will take still quite a lot of time to be deployed and being effective, but it is shifting somehow the economic center of gravity further towards Asia. As usual, thank you very much for watching. And if you have other questions, feel free to reach out to our great customer support anytime.